Speak to the issue of the Apple privacy changes in terms of the iOS, because I think both you and the market thought something very different was going to be the outcome.
Well, thanks for having me, Andrew. I'm pleased to be here to talk a little bit about the quarter we just reported. So there's been a lot of focus on Apple's privacy changes over the last couple quarters. It's really important to remember all companies are coming at this from a different starting point. Because Twitter historically hasn't leveraged third-party or even first-party signal the same way, because we've historically been 85% brand advertising, which is less impacted by these changes, and 15% direct response, I think we see opportunity where others may see risk. This levels the playing field, and it means that we're all working under a new environment. And as advertisers and agencies adapt, we see opportunity to make ads on Twitter more relevant, not less relevant.
Ned, we've heard from Snap and Facebook both saying that they plan to build new tools to effectively be able to better target their users. Are you building new tools as well?
Well, we're always improving the models that we use to drive better relevance. We're always working to improve the measurement that we provide to advertisers. The work that we've done with the SK ad network, which is what Apple uses to provide anonymized aggregated reporting to advertisers, that's been very helpful. But we're going to continue to consider all the ways that we can help agencies and advertisers measure the success of their campaigns. And when we step back from all of it, we've seen modest impact, as you said, and we still think there's so many ways that we can improve the relevance of the ads that people see on Twitter.
One of the other big issues, of course, is the supply chain and whether companies are going to be advertising. You haven't been hit again in the same way that a Facebook has, in part because so many of the advertisers are either brand advertisers or digital advertisers. Is that something that we should, is the takeaway that there's now opportunity to get into those spaces, or is the takeaway that there's a limit here?
Well more than half of ad revenue at Twitter is tied to services, whether it's credit cards or other things like that, or to digital goods. A launch of a movie, a launch of a streaming service, a launch of a fitness subscription program, and other really compelling offerings for the people who are on Twitter that they're finding from the advertisers who are buying website click ads, who are buying ads to help people find their apps through Twitter, and all the events and topics that are bringing people to our service. So that's been a real opportunity for us to help with services and digital goods. I suspect our mix may be different from others. We certainly see the supply chain constraints affecting us when we're buying servers. We see them impacting some of our CPG and consumer electronics advertisers. But we still see lots of opportunity around services and digital goods, given how big that is as a percentage of our.
But I assume long term, the ambition is to capture more of that market, which you're not in now.
Well, there's definitely lots of opportunity to improve commerce on Twitter. We've launched business profiles, which help businesses differentiate themselves from your account and mine. We've experimented with a buy button on those business profiles, and you'll see more commerce opportunities over time. But commerce doesn't have to mean buying a physical good. Commerce can mean helping somebody transact where they're subscribing to a new service. It could mean buying an NFT. It could mean buying something else that doesn't have to be physical in nature.
Shepard Smith here. Thanks for watching CNBC on YouTube.